Please join me in welcoming Rhona Morrell, Advisory Board Member of Cooper Perry, Bruce Huber, CEO of Alexa Capital, Alex Bebov, CEO and Managing Partner at BAC, Sonia Dunlop, CEO at Global Solar Council, Daniel Price, Managing Director at Antin. Thank you.
How is everyone after lunch? Everyone's still awake. Did anybody have that pudding? Because I'm slightly buzzing after that sweet delight. So hopefully you're going to stay awake. I'm delighted to be, I'm going to get this in, showing my birthday today with this great panel. And so what I'm going to do, like everybody else has done, is give everyone the opportunity just to briefly introduce themselves. I will warn you, I've got 4 questions, so I would love to be able to get through them. So as succinctly as you can, and to allow everyone an equal voice would be fantastic. So over to you.
Bruce Huber, I introduced myself earlier, so I'll keep it very short. I'm Chief Executive of Alexa Capital, which an investment bank wholly focused on energy transition. We're headquartered here in London with a presence in Berlin and New York. And we've been in these energy transition markets for about 20 years.
I'm Alex Bebov. I'm CEO of BAC Securities and BAC Limited. I've been for 30 years in asset management and investment banking. I went to Harvard and NYU and worked for the big banks like JP Morgan and Salomon Smith Barney Citigroup. 21 years of history. Focus is infrastructure, energy transition in emerging Europe and emerging Asia.
Thanks very much. My name is Sonia Dunlop. I'm the CEO of the Global Solar Council. We're the World Solar PV and Battery Storage Industry Association, a not-for-profit independent organization representing the industry, working to increase investment and finance flows into the sector and working to lower the cost of finance and address other challenges to deployment that remain. Thank you.
Hi there, Daniel Price. I'm an MD with Antin Infrastructure Partners. We're a 30 billion AUM private equity investor in infrastructure specifically, mostly across Europe, North America, within energy and environment and energy transition, as well as diversified other sectors. And I'm spending a lot of my time both across Europe, but also the Middle East and UK with our clients. So very interesting to be here today.
Thank you very much. And lastly, I'm Rhona Morrell. I'm actually not an advisor at Cooper Perry, but I'll take the title. I do have my own business. I'm a King's Trust mentor, a trustee for Education Africa, a podcaster, and I delve into all things in the UN Sustainable Development Goals and operational fixing. So our topic this afternoon is all around understanding the allocation of trends within the investment sector, co-investment opportunities, the due diligence side of things, and I'd really like to home in on some specific ESG metrics. So if you would like to go first, the question would be, how have limited partner allocations to energy transitions and the PE funds evolved in the last 3 years? What significant changes have you seen across your relevant market?
So I'll touch upon two or three aspects, and you know, in our work where we're capitalizing both platform corporates and projects, and less about the LPs into funds, but we are seeing a pretty significant shift at multiple levels. One, we'd seen a lot of what we described as tourists come into the market. Those who didn't really understand the power markets and the energy transition markets, and then with a flood of capital in around 2000, 2001, it became a very crowded market, and I think a number of funds have skinned their knees, if I could put it that way, because I think there's a recognition that the energy transition it's not smooth and easy. One doesn't need to understand the regional aspects of that. It is a multi-speed market, and so we're seeing a huge shift in terms of how the haves and have-nots, or the in terms of an understanding of how to deploy capital effectively, efficiently in these markets. The second part of that is that we've seen a shift, which is a multi-decade shift from infrastructure capital that flowed after subsidies or subventions to a market where the subsidies have been dropping away, and so there's a much more merchant exposure. So that has meant that the classical infrastructure that clips coupons is now looking for, or now needs to to manage in a market where there is less contracted revenues or a lot more work to do to build the contractive offtakes, which means that that's created more of an opportunity for private and growth capital in this transition. And then I think the third aspect I just touched upon is that we're seeing more and more of that capital move from sort of mainstream, big, large projects to specialist sectors. We're financing a big platform in the decarbonization of marine sector. We see more capital moving behind the meter. We can talk about some of those sectors later, but just to say that the market is shifting as well to be less of a plain vanilla and more of a specialist market.
I would actually fully agree with that, and we can see it both across products and across geographies. Obviously, if you were to look at 3 years ago, the interest was mostly into investments into Europe, mainstream energy transition stories. US, of course, was very, very interesting with the Inflation Reduction Act until Trump came to power, and then there was kind of a temporary slowdown, which I think is changing back into new money flowing into the US, and actually namely Middle Eastern LPs putting money again back to US these days as we speak. I think that gradually you are shifting geographically more into new areas, including Central and Eastern Europe, Southeastern Europe, and Asia, where the growth is. Asia is very interesting because in my eyes, it provides on the energy transition space interesting opportunities in some of the geographies on the traditional renewables, batteries and storage, while others like Middle East are probably interesting areas when it comes to other less trivial energy transition stories like recycling, like waste management in our eyes, like recycling to electricity, like BEST. I think enormous opportunities in our eyes for inward investment into the region when it comes to the Middle East. When it comes to strategies in the general energy transition, I fully agree that it's more into going a bit more into the merchant element. But again, the more you go outside of developed geographies, the tougher it is, except there are some very interesting spots that we're looking in our new Emerging Europe and Asia fund now. I think the combination of infrastructure development with green tech is becoming another area more and more, from West European strategies to other Asian strategies, that you would combine developments in renewables and batteries and storage with green tech up to data centers. And this is where, in our eyes, would make money for LPs more and more.
Thank you. And Sonia?
Thanks, Rhona. I think I want to come to the point you made about due diligence in your question, because due diligence for us in solar is incredibly important. We have to be able to prove to our investors, including the gentleman here on the panel, that that we can meet all of the highest ESG standards in our sector. And that is why we, as the Global Solar Council, the World Industry Association representing every region of the world and every part of the value chain, created, together with a whole series of transparency and human rights NGOs and with some of the international financial institutions, a new initiative called the Solar Stewardship Initiative, which is essentially the equivalent of the Forest Stewardship Council or the Marine Stewardship Council, but for solar panels. And in that, we have created a really robust mechanism to ensure and to audit and to verify the transparency, the traceability, the ESG standards in the solar industry, and being able to address any concerns that the investors had. And by doing that, have actually allowed, and of course the scheme is still kind of embedding and still growing, but have allowed a lot more capital to be able to comfortably go into solar projects around the world, in the knowledge that they are part of a multi-stakeholder initiative to address those due diligence concerns. And we're working on getting the World Bank, the EIB, the EBRD, all of the multilaterals and bilateral financial institutions to adopt that as their primary due diligence methodology for solar PV. And, it may well at some point in the future also be expanded to battery storage as well.
Thank you. Daniel, I'm going to go a little rogue on you now. So we were just talking about due diligence. Can you talk a little bit about how you've seen that shape over the last 3 years, extra demands, things that have really stood out for you within your market?
I think for us, I mean, generally, we've seen increased demand from all of our limited partners across all segments of infrastructure, and particularly energy transition. I think one thing that's changed maybe in the last few years, there's probably, I think we're seeing more of a trend towards diversified energy transition funds. I think a couple of years ago, and this sort of comes to the due diligence point, having a hydrogen-only focused fund or whatever that strategy might be, has maybe been a bit more challenging more latterly. And I think we're spending a lot more time, particularly as it relates to new technologies, whether that's carbon capture, hydrogen, or others, on the due diligence side of things. And that is a lot in the technical due diligence. And a lot of these sectors are newer. And for us as infrastructure or private equity investors, we don't like to take technology risk generally. So we like to come in at a stage where the technology works and is adopted. So you need to spend a lot of time on DD there, and also commercial risk. So we like to come in at a point where you can see a path to those long-term contracts and cash flows. So due diligence-wise for us, particularly within energy transition, it comes in the technical DD of the kind of technologies you're looking at. But very much crucially, it comes in, what are the offtake contracts? And a lot of the time we're shaping those. If you're putting in place, whether it's, hydrogen or, we have some circular economy type investments, we're putting in place long-term offtake agreements, often than not for the first time. So we're spending a lot of time on our DD and on how you kind of put those together, which is very similar to what the sector did within fiber 10 years ago, same with renewables 10, 15 years ago.
I wonder if I could weigh in a little bit, because and just to make sure we're talking about different things, and there's a little bit of an apples and pears going on here, because one is a level of technical DD to make sure that whatever that platform does what it says on the tin. I think the other thing that is a really important part of the market that we're in is that in the this energy transition trilemma, we've had 20 years where there has been a big focus on decarbonization and energy security, particularly for this region without its let's just say readily available sources of natural gas and conventional fuel, and with the crisis with Russia and Ukraine. Now the real focus that we're finding is a real sense of accountability on cost and affordability. And if we look at this region, again, Europe and UK, you've got energy prices that are 3 or 4 times that of what they might be in West Texas, and how industrially does one compete, and are those solutions bankable? It's not just that they work and they do what they say on the tin, but that they really can be competitive in a global market. And so there's been a real investor, from our experience, a real investor push to understand the relative price and cost, because we have a system here in a number of regions which is just, some would argue that is a bit overpriced, and there does need to be some structural thinking around how to deliver for the end customer, industrial, commercial, or residential, to get affordable, not just low carbon and secure power.
Thank you, Bruce. It's one word I'd call it: expensive in the UK. Just decouple it from gas. Thank you. Alex, you mentioned some really important points there. We're talking today about energy transition. I know the audience earlier were talking very much about electricity. What sort of trends are you seeing from waste to fuel, be that plastics, food waste? Are you seeing not only your investors, but also banks requiring more information or looking into that a little bit more now?
Yeah, absolutely. I think as a trend, especially in some of the Asian markets that we are involved with, this is one of our key focuses. Banks are starting to look more into that sector. I think it's sometimes it's issue of the LTV that they would look at to provide you, and how much leverage. I think the good thing is that we are seeing certain interests of some of the sovereign wealth funds from Asia, and not only Middle East, but looking more into supporting equity, but also debt. I think what is more interesting is we are seeing, for example, family offices starting to look into individual deals in the recycling and waste management, as well as waste to electricity. We're starting to see also some of the institutions in Asia looking into that area. We brought a very serious team from US and from France and UK especially to bring additional expertise to what we have done over the last 21 years. And I think these are areas that even though they seem a bit off the radar screen, assets probably medium size as opposed to the big utility scale assets that you can see for the big players, but quite interesting and certainly part of our IRR main focus when it comes to Asia especially.
Thank you. And Daniel, can you just pick up a little bit more on that and then some
I
of the
think
technical?
very similar to sentiment that Alex has mentioned. What we're seeing, I think, is sectors that are very hard to decarbonize, but of great opportunity and scale. So whether that's plastic recycling, something that we've done recently is within the circular economy space, so specifically tires. So end-of-life tires are a huge environmental problem. We're typically going through tires more and more as you have EVs, which are heavier. But today, they're pretty much landfilled, chopped up, sent to emerging markets and put in cement kilns, so very unsustainable. Whereas we found a technology which exists, which effectively recycles end-of-life tires, and out of those tires you get two products. You get recycled carbon black, which 70% of tires are made of carbon black, and you get some recycled sort of petrochemicals. What you then typically need to do with these newer technologies, you enter into partnerships. So on that deal, we have a partnership with Michelin, who then take some of that carbon black and use it for recycled products. The point there being, it then needs to be very scalable. That's a global problem. And once you have a first site and project, you prove the technology works, you prove you can have offtake agreements, you then go and build plant 2, 3, 4, 5. So those kind of niche sectors we like.
Thank you.
Rhona, I have to pick you up. I'm sorry. You said just all we need to, I don't want to spend too much time on the electricity point, but you just said all we need to do is decouple from gas, and I think that is a misnomer. And that
in the UK?
Well, I would just say in this region, the commodity price is in many parts is a minority of the overall energy bill, and it's the transmission and distribution charges and the taxes that have been part of the subsidy of this energy transition shift. And so it is not just a case of decoupling for gas for that solution. It is a case of actually looking at a number of either behind the meter, closed loop solutions, or addressing some of these markets, which, by the way, molecules plays a really important part in. The circular economy plays a really important part of. When we're looking at, I made reference to the marine sector. That is where the paybacks are 2-3 years on electrification in marine. So we're beginning to go into markets which are, in a way, circumnavigating the public infrastructure. They're circumnavigating the grid and distribution networks because we've spent 20-25 years layering up so much cost and charge. And by the way, the queues for doing more development there have become so lengthy that it becomes an almost impossible investor proposition. So we're now moving to industrial parks and behind the meter and solutions that actually help the end customer reduce their overall cost, because we've slightly overburdened the whole public infrastructure with too much additional cost.
But can I say, I think you're both right, because it is absolutely true that because of the merit order effect in markets like the UK electricity market, in the GB electricity market, that gas is driving the per kilowatt hour price of electricity, right? And because of that merit order effect, and we've got to get to a position where the national electricity transmission system operator doesn't need to always keep that last 2 gigawatts of gas on the system, where it does have enough batteries, and we're getting there, right? Especially with the very innovative work that the transmission system operator has done here in the UK to create an inertia market, the first inertia market in the world. I can tell you people are talking about it all over the world in the solar industry. To be able to eliminate those last 2 gigawatts of gas that we always keep running and be able to run the system and allow renewables to bring down that per kilowatt hour price. But you're right that by going behind the meter and by moving to behind-the-meter electricity generation and storage solutions, you're completely changing the way electricity is generated. And it means that it doesn't need to be sent for thousands of kilometers across grids, and that each and every one of you in your homes and in your businesses can become self-consumers and producers of electricity. But I just want to bring the conversation back to the Gulf, right? Because this is obviously the UK-GCC conference. And I do think the Gulf has a really important role to play. And we saw that at COP28 Dubai in the United Arab Emirates, where we had the global tripling of renewables target agreed at global level, followed the following year by the global grids investment, to your point, Bruce, and global storage targets as well. But it's also a region that has a huge amount of catching up to do in terms of deployment, and has a region that has to really think about what is the right electricity mix for those GCC countries. And the International Renewable Energy Agency, which is based in Abu Dhabi, is doing a lot of that thought leadership, and really has a huge role to play in supporting the whole of that region, both finance the energy transition around the world. Saudi Arabia is becoming one of the sort of potential future manufacturing hubs for solar and battery storage, and also make the energy transition happen in their region as well.
Thank you. For Daniel and for Alex, we've touched on a little bit around the kind of metrics, and we talk a lot about return on investment. Do you think that the current kind of PE benchmarks are fit for purpose for how we measure a lot of these projects? And what other frameworks around ESG do you use? Are you looking for science-based targets? Are you looking for B Corps? What sort of frameworks are you integrating into your decision making? Daniel, if you want to go first.
For us, all of our funds are Article 8 funds. We have one which is more focused on energy transition and earlier stage type of investments, which arguably could have been sort of an Article 9 fund. At the time, we didn't want to sign up to that, as a lot of the rules were unclear. I think for us, I think, yeah, to your point, we sometimes struggle with the sort of financial reporting and returns, but also a lot of the ESG reporting as well. So we've tried to adopt a consistent approach, whether that's being very SDG aligned or scope, the EU scope 2 or 3. And the challenge we often have with our investors is they have their own reporting requirements. So having uniform data, I think, continues to be a problem across the industry. And I think there have been a lot of strides that are helping, but I think we've got a way to go. And I think particularly as it relates to energy transition investments, particular earlier stage ones, both the financial kind of return and also the impact, the way you measure impact, you can have a bit of a steep J-curve on both of those things. And I think that often requires a bit of hand-holding with our investors to kind of take them along there.
Yeah, in our case, for our new Emerging Europe and Asia Fund, we're focused on Article 8 or most probably even Article 9 because of the very strong ESG component. But I think leave aside the SFDR regulations, I think investors are becoming more and more sensitive into what are the returns, play around with sensitivities of returns, look into the gross IRR and net IRR is probably key metrics, and going down the spectrum of looking into potential deal flow projects and looking into fund models. So it's going deep into the profitability, and I think it's becoming more and more thematic. On one side, not as tight as looking into specific themes or taking risk on the, for example, green tech side. So I fully agree, it is actually more diversified themes. But on the other side, I think it has to have the story in order to catch the attention more and more of LPs. And by that, I wouldn't mean only Middle Eastern LPs. Southeast Asian LPs are becoming more and more interested to look into the energy transition space. It's a very interesting area in our eyes, and we certainly bet on Asia and the growth in Asia, both for investing into Asia as well as looking into the fundraising side. But again, I think the thematics and the profitability, certainly the two key areas, as opposed to only being in ESG focused. I mean, it's long gone as a story.
Can I just say, risks are higher. Risks have all gone up. Investors need to be compensated for those returns. And so we're seeing the Article 9 funds in some respects being more disadvantaged because to address the delivery of affordability and to ensure you're delivering these returns, you need to think of in integrating all of the renewables. Storage only takes you so far. We're seeing more interest in gas peakers. Those would be assets that might only be operating 6 or 7 days a year, but they are solving a Dunkelflaut problem. So we're just really cautious in this environment because the subsidies are dropping away. There is more merchant exposure, more need for managing offtakes, structuring in so many different ways, and that commands a return.
Thank you. I just want to check on time because I know we started 15 minutes late.
Fine. You've got until 20.
Okay, fantastic. Just kind of pose this one out there. The planet is 70% blue. So what, if anything, are you starting to see through those different thematic strategies that are including the ocean? We're very much focused on, you touched on carbon capture earlier. My personal opinion doesn't matter today, but what are you seeing coming through from a blue economy? Daniel?
I think, less sort of sea or ocean related, but we like water and wastewater treatment. That's kind of a long-standing, more of a wider sort of infrastructure play. So we're seeing a lot in that space still. And then newer technologies, we're seeing, I guess, we're seeing some things, but it's still quite early stage, I think, generally speaking.
That sounds very secretive. We'll get it out of him, don't worry.
So on our side, there is actually a really interesting emerging market segment for solar in terms of coastal offshore floating solar. Coastal offshore floating solar. So there's already a lot of floating solar on inland waters.
Doesn't NEOM have a huge, I don't know if the gentleman is still here from NEOM, but they have a huge one, don't they?
Yeah. In France, you mean?
No, NEOM in Saudi Arabia.
Oh, right. Oh, yes,
they've got a
right.
huge...
Yes, they're building floating solar, yeah. So there's already a lot of floating solar on inland waters, reservoirs, hydroelectric dams, and so on. But there's actually, in some parts of the world, real potential for offshore coastal floating solar, specifically in Southeast Asia, and of course in the Maldives and the Seychelles and places like that, and also retrofitting solar and battery storage onto offshore wind, where essentially every time what you're trying to do is trying to use the same grid connection as is already in place for the hydropower installation or for the offshore wind or whatever it might be, and adding PV onto that in order to essentially increase the utilization rate of that infrastructure and increase the return of the project. So we're seeing a lot of that going on as well.
Thank you. Do you want to add anything more to that?
I don't say that the United Nations International Maritime Organization, IMO, has put in force some very stringent regulation with 2030 targets that are tightening all the time. So we're seeing quite a bit of focus and interest around that marine environment. I made reference to some of the work that we're doing there in electrification marine, but we're also seeing that moving into the port infrastructure, and by extension that creates a trading ecosystem that's not just around shipping and all the different vessel types that are looking at hybrid or all electric, and it's not just about motive power, but it's all the material handling and the peak shaving, when the throttle goes down, rather than putting that through a diesel genset, they put it through a battery. So that environment is cleaning up, but the port infrastructure then is cleaning up, and then that gives way to a whole port infrastructure, because when you look at the containers coming off these container ships, they're typically not traveling more than about 80 miles or 120 kilometers from that port. and so there's then that opens up whole opportunities for closed loop, which could be. They could be even hydrogen or other syn fuel related closed loop systems. So when we get the momentum behind marine and behind the ports, I think that's going to create some more opportunity for infrastructure and growth equity to flow around that whole system.
And if I can add to that, so I'm also vice chair of the Global Renewables Alliance, and we of course also represent green hydrogen and green ammonia. And the Green Pioneer ship, the first ever sort of, or one of the first green ammonia co-fired ships, was here in London the other day, anchored right next to HMS Belfast, if you know, on the Thames, and was really inspirational, and was sort of really pushing boundaries and showing what can be done, not just with electrification, which of course I absolutely support, but also with green ammonia co-firing of shipping around the world, and Fortescue's doing fantastic work with that.
A little known fact is even the ammonia or hydrogen-driven vessels will need batteries alongside for the peak shaving, et cetera.
Absolutely.
So we're in a world where they're all, all the drivetrains are electrifying, all the systems are electrifying. Whether you go hydrogen, methanol, ammonia, diesel, bunker fuel, whatever you need, batteries will be included.
And health and safety is always paramount, and that's what the team on the Green Pioneer are really, proving with their work on that ship as well.
And actually, just to add that certainly the EV hydrogen trucks is an area that we are looking, but more on the infrastructure side, to look into where there is there is a local tourism potential, but also where there is also the transit, effectively cargo potential, so that we look into how to service the areas where you would have a high transit of EV hydrogen trucks.
Did you want to add, Dan?
I was just going to add on the sort of dual fuel and hydrogen side. I completely agree. It's a very, very exciting space and sector, and something that we are spending a lot of time on. But what we're seeing, we have a business that it does fire and gas testing within shipping today, and sort of services 30-40% of the world's ships. We're spending a huge amount of time on what does that mean. You're going to need more complex systems to test for fire, leaks, all of these things with dual fuel, ammonia, hydrogen. So it's a very interesting space.
I'm going to ask one last question to each of you, and then because we've got a bit of time, hopefully go to the floor and just see if we've got some questions, because I'd really love to explore any opportunities or collaborations that we can act on today. That would be amazing. But when it comes to finalising your decisions on any of these projects, how much of a percentage do you think the social aspect sits? If I could be really brutal and ask you to give me a percentage figure on the social bearing of that decision, the S part of ESG.
Yeah, I think the pendulum has shifted, and this is a single-digit percentage consideration.
Thank you. Alex?
Yeah, I think the geographies that we're involved more and more these days, Middle East, Central Asia, Central and Eastern Europe, it's actually, by doing what we're doing on energy transition, you actually have a high social element anyway. So it just comes up with the pure fact that you have so much catching up in a different way. Middle East is more catching up across non-oil, from basically from renewables to batteries and storage to recycling. Central and Eastern Europe is just the size of transactions much bigger than Western Europe these days. So it only helps the social element, so it's quite sizable.
For us, I mean, I'd say near a sort of 100%. Typically, when you're operating, whether it's traditional infrastructure or newer infrastructure, you're often than not, you're providing an essential service to the community where you're operating. So you need and want to have a license to operate, and so it's something we're always very focused on. And then secondly, our ESG team is part of our investment team. They're there from stage one of any due diligence, and also it's inherently, it's good business and good practice. You'll ultimately have a more valuable business to exit and sell on if you have done everything that you should do from an environmental, social, and governance point of view.
And then on our side, obviously, we're not an investor, so we take a different angle, but we are very aware that we have 7, 8, maybe 9 million people working for us just in solar around the world. And we've got to make sure that not only are those people well looked after with the right health and safety training to make sure they go to work and come back every day, right? But also that we're doing the workforce planning to make sure that we have the people ready and trained to deliver the growth in the 20% year-on-year growth in terms of deployment that we're forecasting for the next 5, 10 and 15 years. And of course that we have the mechanisms in place to make sure that no one in our supply chain is subject to any kind of unfair labor practice, whether that be, forced labor or anything else. So we have those mechanisms in place, and for us it's an absolute priority.
Thank you. So out to the floor, is there any burning questions for any collaboration opportunities or any challenges that you might have to some of the topics that we've discussed today? Anyone? If not, I'll just ask my own. Oh, gentleman at the back there. Oh, thank you.
Can you put your hand up again? Sorry.
All right. Good. Panel, thank you very much for your insights. Question with regard to the solar panels. Obviously, there's a lot of talk at the moment with regard to solar power panels that are produced in mainland China, with regard to certain defects that they can put in to switch them off, as well as solar panels that are produced by indeed people that are not voluntarily coming into the factory. And my question is, particularly with regard to projects, larger projects, where it's a cost base rather than a sustainability and ESG base, how do you control and how do you monitor, how do you promote developers picking the right panels rather than the cheaper ones?
Yeah, absolutely. Happy to answer that. So what you're referring to is two different issues, really. The first is the question of cybersecurity and solar inverters. So inverters are the machines that convert the DC electricity from solar panels into the AC electricity for the grid. And there, all the leading major inverter manufacturers are obviously working very hard to make sure they put in place the very highest cybersecurity standards. There have been a few stories in the news over the last few weeks in this space. I can tell you that certainly for the reports of devices found in inverters in Denmark, that actually wasn't in solar, that was in another technology, and that has since been clarified, and there was a lot of essentially the reporting was just, there was misreporting going on there. So that is actually not at all related to solar in the Danish case. And we, as the Global Solar Council, are working hard to push all the inverter manufacturers and to not each individually to up their cybersecurity, but to help create a global harmonized standard for cybersecurity, for standards in terms of making sure there are no backdoors, and making sure that even in the sort of software development side, that there are standards as well. And then, as I mentioned earlier, in terms of the question of forced labor, my advice to you and to everyone else in this room, and like every big buyer of solar in Europe and beyond is now doing, only buy from Solar Stewardship Initiative member companies. And then you're getting the best quality, but also the very best in terms of ESG standards and forced labor issues and so on. And you can rest assured, if you buy from Solar Stewardship Initiative members, that you're safe on that front. So obviously the scheme is only just getting going, and we're still in the process of auditing more and more factories, but that is the solution to that issue, and happy to talk to you about that more after the event.
Thank you, Sonia. Bruce?
I was just going to add in that cyber and the power electronic controls in the distributed environment have become a very big growth area, and I think we'll continue to see more growth for solutions that are rolled out and controllable, and actually monitoring the data flow on uptime and so on. So it is a growth subsector that we're seeing in the market.
That's brilliant, and that was another topic I'm sure we could have talked about. One last word from each of you. What would be your call to action to the audience today? Either a personal frustration or a business frustration. What would you want the audience to take away today, Daniel?
It would be keep deploying capital and keep being open to new strategies. And I think one thing would be, particularly as it relates to energy transition, be very conscious of the kind of risk profile and risk you're taking, whether that's more venture capital like private equity or if it's more infrastructure, like particularly with some of these newer technologies.
Thank you. Sonia?
For me, it's really get involved with the Global Solar Council's work and our International Solar Finance Group and our work to reduce the cost of finance in key emerging and least developed country markets, but also think about what it is you need in order to go into those really developing markets so that we can make sure that no country is left behind in the global solar revolution.
And, just maybe to mention, because we're in a GCC UK panel, just to mention, think of the Middle East not only as a sourcing opportunity on the fundraising side, but think that there are also interesting opportunities on the investment side. Maybe they're not in the big news that you would see of big renewable projects or big nuclear projects, but actually think of it as very interesting region also for inward investment.
I just say I think it's an incredibly exciting time. There's been a huge shift from what was this kind of one size fits all very vanilla scale phase of the market, which was how quickly could you deploy large scale wind, solar, renewables, to a very very diverse market with huge opportunities for building systems, whether it's behind the meter, these closed loop systems. We're decarbonizing at a huge pace. We need a lot of capital for that journey, and it's an incredibly exciting time, but does require folks to do the work as we move from market to market and open up these new market opportunities.
I just want to say thank you to the panel. My call to action would be keep being inquisitive. It is all about systems change, and please, there's lots of us out here that can help you through that greenwashing, is the polite word I would use. So please keep being inquisitive and keep digging for the facts and information. Thank you very much to the panel. Thank you.